Bonjour. I'm not going to lie, the budget is not the most pleasant part for a general manager and his team. But it is obligatory and is repeated every year. Generally, we start it around July-August and finish it in November-December. In this chapter, we will see the entire process of creating a budget and its presentation. I will therefore break down the budget chapter in two different sections. Guidelines, top lines rooms, sales and marketing plan, top lines food and beverage and others, expenses rooms, expenses food and beverage and minor operating department, expenses administration and general, expenses sales and marketing, expenses POMEC, budget presentation, executive summary next year, SWOT, segmentation and financial outlook next year, flow summary, hotel scorecard, competition outlook, occupancy expenses, the CAPEX, cash flow presentation, 5 years performance, disagreement with owner, and conclusion and my personal thought. As you can see, this topic is going to keep us busy for a while. Before starting the budget, your hotel company will send you the guidelines for achieving it. These guidelines will give you information on the market, the vision of the company and the vision of your brand for next year, as well as the general strategic objectives and the more specific objectives, which will often be reflected in part of your bonus objectives. For example, on CSR objectives, CSR for corporate social responsibility, a very current subject at the time I made this video. Therefore, CSR objectives such as the elimination of single-use plastic or the reduction of food waste. This can also be in the field of human resources with the global deployment of specific training for all employees or the deployment of a new concept in food and beverage. Finally, the guidelines will tell you mandatory expenses to include in your P&L for next year. This could be, for example, the mandatory move to a cloud PMS system and no longer on a local server, the purchase of a new human resources software, anticipated the cost of future travel for regional or global meetings for the general manager and certain department heads, and many other recommendations. I am showing you the guidelines that I received to prepare my budget for the year 2024. This document is 22 pages long, but it can go up to several dozen pages. Two people are mainly affected by these guidelines, the general manager and the director of finance, so it is very important for them to read them very carefully. However, these guidelines are of course important for department heads, and I would advise each general manager to set aside time with their entire team to make them aware of these guidelines and to explain the company's strategy for the following year. Bonjour. The first of the lines that you will fill out is that of room sales. You will therefore work closely with your sales and marketing manager and your revenue manager. You will have to analyze each segment. I will provide you with the link to the chapter on segmentation. And for each segment, analyze the evolution in occupancy percentage and average daily rate. This is work that is not done at random. You must have a good analysis and a good knowledge of your market. Inform yourself about trends, take into account the particularity of the next year. For example, an international sports competition not recurring in your city, a G7 type political summit, or the concert of a world famous group. You will therefore determine for each segment the ADR and the occupancy percentage for next year. Then, your DRM will have a long job to do what we call the day by day. That is to say, for each segment and for the 365 days of the year, determining the ADR and percentage of occupancy. This is a tedious work, especially since it will probably have to be done several times during the budget period. This first step is decisive for the rest of the budget because it gives you the percentage occupancy for next year, which will be used to partially determine the budget for your food and beverage department and other departments. This is what we will see after the next chapter. Bonjour. As we have seen, you will determine your new ADR and your new occupancy rate in relation to your knowledge of the market and the commercial strategy that you will put in place next year. This is called sales and marketing plan. During your budget presentation to the owner, you will need to explain your plan for each segment and each distribution channel. Explain changes to ADR and occupancy rates. Let's take two examples. In your negotiated segment, you estimate that your occupancy rate will increase from 8% to 15%, but that your ADR will drop from $240 to $220. For an owner, it is always difficult to accept a reduction in ADR. However, your strategy is to significantly increase the occupancy rate, but for this, we'll have to agree to work with contract negotiated with a lower ADR, which will therefore lower your ADR of the segment, but this will be largely compensated by a volume of occupancy from 8% to 15%. Other example, in your transient segment, you estimate that your destination is more and more popular, and therefore that you will not only increase your occupancy, because more and more tourists want to discover your city, but also increase your ADR because the supply in number of existing rooms will not increase in the city, therefore supply lower than demand, the ideal scenario to increase your prices. You will therefore have to explain your commercial strategy for each segment and each distribution channel. The second line of your budget is your food and beverage incomes. The occupancy rate may directly or indirectly influence the revenue of your food and beverage outlets. For example, your main restaurant where breakfast is taken will be directly impacted by your occupancy. Whereas, if you have a very popular bar with 90% of external customers, your occupancy rate will have little influence. Therefore, you will work closely this time with your food and beverage director and your operation director. You will analyze each outlet, analyze the impact of the change in the hotel occupancy rate on these centers. You will also analyze the impact on incomes in your outlets that a new global food and beverage strategy detailed in the guidelines can have. Unlike rooms, you are not going to do a day-by-day analysis. However, you will use a lot of analysis of the average ticket and the number of covers to make your budget and your result must be logical. If they are not, the owner or asset manager could challenge you during the budget presentation, which you do not want. Then, you will do more or less the same process with the other revenue centers, such as the spa, the boutique, the laundry, the golf, etc. You will do this with the operation director and the manager of each profit center. Bonjour. A budget is the creation of a P&L, profit and loss. I will give you the link to the video which covers this chapter. We have seen that the first phase of the work is on the top lines, profit. So it is now important to analyze the expenses, loss, for each department. For the expenses in rooms, you will work closely with your director of finance, your director of operations, your director of human resources, and your director of rooms. Here too, the occupancy rate will have a strong influence because it will influence your variable costs, such as number of additional employees, cleaning product, purchase of linen, laundry, amenities, gel, shampoo, etc., complimentary gift to guests on arrival, and other variable costs. After your variable costs, you will add all your fixed costs such as floral decoration in common areas, employees not linked to the occupancy rate, reception manager, head concierge, housekeeping director, etc., internal line, and other fixed costs. Your financial director will put all of this into his system to give you the department's GOP. gross operating profit. I will also provide you with the link to the video which talk about GOP. Here too, it will be very important to be able to explain every line to the owner when presenting the budget. In general, it will challenge you mainly on the productivity rate and therefore on the number of employees, which is generally the most important expense. To do the food and beverage expenses, you will work closely with the food and beverage director, your operation director, your human resources director, and your financial director. In general, the owner looks at the four main points in this department: payroll and its evolution, food cost, this is the percentage of the cost of purchasing food versus food sales. Beverage cost, this is the percentage of the cost of purchasing drinks versus drink sales. And the percentage profit of the department. And if one of these 4 points is not good, then he will go into detail, point of sales by analyzing the cover, the average check, etc. And I hope you have a coherent figure to present. You will do exactly the same thing for minor operating departments, spa, boutique, golf, etc. Administration and general expenses, this group is part of the unprofitable departments, meaning they generate more expenses than revenues. Administration and general includes the following services: general management, general manager, personal assistant to the general manager, operation director. The finance department, including purchases. The human resource department. This group is not very dependent on an increase in occupancy because the hotel needs these services regardless of occupancy. However, here too you will need to be attentive to the productivity ratio and expenses of this group to avoid any embarrassing question during the presentation to the owner. Another department which is part of the non-profitable department, also relatively little dependent on an increase in occupancy, is the IT department. It is often a department badly viewed by owners because there are always unplanned expenses for equipment, cable network, routers, etc. We have previously seen the sales and marketing strategic plan, but here it is a question of knowing all the expenses to execute this strategic plan. Here is a non-exhaustive list of expenses for a sales and marketing department. Wages, trade show, I will do a chapter dedicated to trade show very soon, public relations, travel expenses, complementary service and gift, entertainment, travel agencies, commission, photograph, marketing event, farm trip, etc. In general, sales and marketing expenses represent between 5 to 10% of total revenue. POMEC, as we saw in the P&L chapter, I will put the link in the description, means operations, maintenance and energy cost, more commonly called maintenance or engineering. There, obviously, there is no income and only expenses. Certain expenses are linked to the occupancy rate, but without following a purely professional rule. Take electricity, for example. A 5% increase in occupancy does not increase your electricity bill by 5%, because the consumption for lighting in common area and air conditioning will not change much with an increase in occupancy. On the other hand, your consumption per customer will decrease because the consumption of air conditioning for 1 or 100 customers is generally the same, but divided the bill by 1 or by 100 does not have the same result. It is therefore sometimes difficult to assess energy consumption a year in advance. The same goes for gas and water consumption, even if water is slightly more linked to the occupancy rate. This department will also be the subject of particular attention from the owner because these are major expenses. Once you have all your figures for the next year, you need to format them to present them to the owner. Here is an example of the presentation. Executive summary current year. In this part, you will detail everything that may have influenced your result this year. For example, the visit of a head of state who generate a lot of incomes for you, but which will not be repeated next year. or a significant valuation of the local currency versus the dollar which affect your result. Another part, Outlook current year segmentation. In this part, you will also give your actual result up to the month in which you present your budget and your forecast for the following ones until the end of the year. Financial Outlook current year. In this part, you will give your actual result up to the month you present your budget and your forecast for the following ones until the end of the year. Be careful. Your forecast must be realistic, otherwise your owner will challenge you and in this case can seriously disrupt your presentation. For example, do not make a very low forecast for the last 3 months of the year by telling yourself that this will allow you to make a lower budget for next year. Your forecast must be, as we saw it, more or less 5% of reality. The next point of the presentation of the budget, I will go into more detail in the next videos. This includes executive summary next year with the SWOT, I will detail it in the next video. Competition outlook, I will also detail it in a future video. Segmentation outlook next year, as we have seen, we will present and explain our strategy for each segment with the ADR and occupancy rate for next year. Financial outlook next year. Following the presentation of the segmentation, we will therefore give the top lines and present all the P&L. Financial outlook per department. We will present this in part in the detailed P&L of each department, profitable and non-profitable. Flow-through summary, hotel scorecard, occupancy expenses, CAPEX, cash flow projection, 5 years performance. Bonjour. During the budget presentation, we will present everything that could influence next year. This is what we call the executive summary, which is often presented with the SWOT method. SWOT for strength, weakness, opportunities, and threat. SWOT is presented in a table of 4 boxes. Strength, this includes all the strengths of the hotel for the next year. Weakness, this includes all the weakness of the hotel. Opportunity, this is more general to the market. Threat, this is too more general to the market. Following the executive summary, we will therefore present our vision of segmentation for next year with the new occupancy rate and ADR and all the analysis strategy that goes with it. Following this, we will present the financial outlook for next year, first with the top lines and then the P&L of each department and the explanation of each increase in cost. This will take us to the next video on flow-through summary. Bonjour. Following the executive summary, we will therefore present our vision of segmentation for next year with the new occupancy rate and ADR and all the analysis strategy that goes with it. Following this, we will present the financial outlook for next year, first with the top lines and then the P&L of each department and the explanation of each increase in cost. As we have seen in the chapter on flow-through, I will put the link in the description. This indicator is used more and more and it will therefore be used in each department. For example, in the food and beverage department, then in each food and beverage outlet, we will calculate the flow-through between your increase in incomes and your result. I remind you that a flow-through must be at least equal to 50%, even if the owners are hoping a flow-through close to 70% or, of course, higher. This flow-through will determine the degree of productivity and will often help the owner to pressure you to reduce your cost. Bonjour. In the budget presentation, you will surely have a slide which summarizes all your scores for the next year. I give you a non-exhaustive list. Occupancy rate, ADR, RevPAR, RevPAR index, GOP percentage, guest satisfaction survey, employee satisfaction survey, e-reputation score, EFTE and room food and beverage productivity, Mr. Reggae score, fidelity program recruitment, and etc. In the next video, we'll see the Outlook competition. Bonjour. In the budget presentation, you will surely have a slide which summarizes all your scores for the next year. I give you a non-exhaustive list. Occupancy rate, ADR, RevPAR, RevPAR index, GOP percentage, guest satisfaction survey, employee satisfaction survey, e-reputation score, EFTE and room food and beverage productivity, Mr. Reggae score, fidelity program recruitment, and etc. Bonjour. During the budget presentation, you will also present the competition, its evolution, renovation in progress or finalized, new competitors, new concept, restaurant, bar, etc. Also, STR forecast. I will give you the link to the video on STR and its KPIs. The company STR during the budget period gives us the opportunity to have its analysis of the market for the next year, and thus has the forecast of the ADR, occupancy rate, and therefore the RevPAR of our competitive set for next year. Of course, your budget proposal must be in line with this evolution of the market. Whether you propose a budget well above or below the market, it will have to be explained. Obviously, your owner will be waiting for an above market offer. Bonjour. During your presentation of the budget, you will also present the occupancy expenses. That is to say, all the expenses below the GOP. Fees, basic and incentive, see the link to the video which covers this subject in description. Local taxes, insurances, all other expenses not related to operation. This will allow you to present to the owner the EBITDA, a very important indicator for the owner, as we saw in the video of which I put the link in the description. In the next video, we will see the CAPEX. Bonjour. During your presentation of the budget, you will also present the occupancy expenses. That is to say, all the expenses below the GOP. Fees, basic and incentive, see the link to the video which covers this subject in description. Local taxes, insurances, all other expenses not related to operation. This will allow you to present to the owner the EBITDA, a very important indicator for the owner, as we saw in the video of which I put the link in the description. Bonjour. During the budget presentation, you will also present the CAPEX. CAPEX for capital expenditure. This presentation represents all the purchases you are going to make to improve the hotel or operation, for example, the purchase of a new computer server, the purchase of a new dishwashing machine, the change of the carpet in the common areas, etc. It is never very easy to plan a year in advance for all the expenses you will incur, but you must be more than 90% successful. You should be aware that CAPEX can represent a very large budget because it can go up to 5% of your annual incomes and therefore quickly reach several $100,000. Of course, this whole budget presentation has an important purpose for the owner. How much money are you going to pay him next year? So, you are going to present him with a cash flow projection month by month. It is not linear over time, nor proportional to the incomes and result of each month because certain expenses can be one-off and significant. For example, an annual tax that will be paid in June, or bonuses which will be paid in March, or insurance that will be paid only one time a year. On average, over the year, cash flow will be close to EBITDA minus CAPEX. Bonjour. To finish the presentation of the budget, the owner would like to have your 5 years projection on the result, occupancy rate, ADR, RevPAR, GOP, and EBITDA. Conversely, you and your hotel company do not like this exercise because it is always very complicated to forecast the market in 5 years, and you do not want to promise something in writing that may not happen. It will therefore be necessary to make plenty of usual restrictions during this presentation. In the next video, we'll see what happens when the owner does not agree with your budget. Bonjour. To finish the presentation of the budget, the owner would like to have your 5 years projection on the result: occupancy rate, ADR, RevPAR, GOP, and EBITDA. Conversely, you and your hotel company do not like this exercise because it is always very complicated to forecast the market in 5 years, and you do not want to promise something in writing that may not happen. It will therefore be necessary to make plenty of usual restrictions during this presentation. Bonjour. It is very rare that the owner agrees from your first budget presentation. It is even rarer that he asks you to lower it. Conversely, it is very likely that he will ask you to increase it, either by increasing incomes or by reducing expenses, or more likely, both. In general, he will give you an indication of the final figure he wants. You will therefore agree on the next presentation date. You will therefore rework your budget with your team, verify it with your corporate team, and after validation, you will represent it to the owner. This second presentation is often the right one, but it may happen that a third, then a fourth is necessary. In some very rare cases, it may happen that there is no agreement. You should know, as we saw in the video on the HMA, I will put the link in the description, that there are always management contract termination clauses. The result, GOP, RevPAR index, etc., is often one of them. So an owner who intends to break the contract may try to obtain a budget that is almost impossible to achieve in order to be able to terminate the contract if it is not reached for the following year. In very rare cases, I have never had it personally, it is a justice which will divide the two parties by analyzing all the data and giving reason to the management company or the owner. Again, this is extremely rare. The budget is therefore a long process which is renewed every year from July-August to November-December. Even though I obviously consider that the budget is important, I find that the time spent by all the teams in preparing this budget is disproportionate. Too often during my career, I have seen ultra-prepared budget with well-balanced ratio between sales, expenses, productivity, etc. And ultimately, all of this completely turned upside down because owner wants a certain amount and that's it. I think that every budget preparation is missing an official pre-meeting with the owner to have his vision of next year's result and to start discussing on this basis. Regardless, for young GMs, I advise getting really involved in preparing the budget with each department and really include each department head so they are accountable for their numbers. This is the end of the chapter about the budget. Let me know what you think if you have any question. Thank you.